Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Kinahan, Chief Market Strategist at TD Ameritrade, to discuss the latest investor movement index results and retail trading trends as clients increased exposure to equities despite local and state economies reversing course on reopening plans with COVID-19 cases surging to record levels. And it's really interesting. The data that the IMX suggested is retail traders are still continuing to put money to work in this market.
Yeah, they are, Jill. What's really interesting to me, to be honest with you, is there seems to be a media perception that retail traders are out there either not participating at all or buying everything with both hands. And what our data is showing is that they've increased exposure every month for the last 4 months. Nothing crazy, but very methodical in how they're doing so, with a couple of clear winners in terms of the industries that they're definitely interested in. And to your point, a lot of it seems to be optimism around reopening, because airlines, and I'm going to include Boeing along with the airlines, and cruise lines continue to be two top areas that our clients are very interested in.
I think that's really been the interesting story of the COVID-19 lockdown, is how retail investors are approaching the market. It certainly has been in financial media, but let's dive a little bit deeper into the top buys and sells. Where did you see that buying activity, and conversely the sells?
Yeah, as I said, we saw it in Boeing, but we saw it in the related airline stocks also. You saw Southwest Airlines, which, by the way, was primarily driven by our millennial clients. You saw Delta Airlines, primarily driven by our older clients. And then American Airlines seems to be one that everybody across the board was interested in. The interesting thing to me on all of these, the ones I just named, the ones I won't name, you had sort of that mid-month, a little bit of a drop-off in the S&P 500. And in what we saw with that was our clients buying a lot of things earlier in the month. As we dropped, they really came in to buy things strongly. And then we started to go back up at the end of the month. So the buy the dip mentality seems to also still exist. With that, as I said, the cruise lines, Carnival and Norwegian, continue to be favorites. As you and I have talked over the last couple of months, particularly our millennial clients are the ones who started buying there. What we see from some evidence across the country, I think it ties in very heavily to the fact that some of the evidence you see across the country is the millennial clients who are much more likely to be in group scenes, so to speak, to be less afraid and to have much more optimism around the country reopening. This is also tying in to how they're investing.
Any discernible trends on the sell side?
Gilead was the leader on the sell side. Part of that is, 52-week high. You look at that chart, you're like, oh my gosh, amazing chart in terms of how the stock's gone up. And so that was a buy a few months ago. As it's gone to these incredible highs, people are turning around and using that as an opportunity to sell. Another really interesting thing was the Asian influence stocks, BABA, IQ, a couple that have also gone near 52-week highs. And with that, our clients selling those stocks. So I don't, trying to discern whether that means they're more optimistic on the domestic scene overall, or because these stocks have done pretty well, they're just like, okay, we're going to flatten out and see if there's other opportunities elsewhere.
All right, let's look at the back half of 2020, because here we are. It's July 6th. It's a Monday. The Nasdaq 100 is at record highs. S&P 500 not too far behind from where it was pre-COVID-19 levels. Meanwhile, there is a surge of cases. Local economies are shutting down. We have a U.S. election on the horizon in the fourth quarter. It seems as if, has the market already priced this in earlier in the year, or are we just not there yet?
I think right now, Jill, we're in a strange time where, as you say, we're in a week right now. We don't have many earnings. Costco coming out this week. We really don't start earnings season until next week. So with that, we're trading on the COVID-19 news, no doubt about it. I think on a normal news cycle, you might also see the election start to be more factored into the market. Right now, COVID takes all news first. So I think you may start to see the reaction to the election be delayed a bit more in terms of when people are preparing for it. And also, as we've learned from some elections recently, polling is really kind of hard to get your arms around of what it means. And it's not just the president. You have the Congress up for grabs also. So there's a lot going on, a lot to concern yourself with. I think that for the next 6 weeks or so, we really focus much more on what's going on with COVID, developments there, if you're starting to see schools make plans to go back, et cetera, the people's focus is going to be narrower because just their day-to-day lives are so affected, in my opinion.
And then, of course, when we come back to speak in August for the July results, we will have had 3 to 4 weeks of earnings to take a look at also.
Yeah, and it's going to be interesting to see it. Let's face it, everybody got a free pass last earnings season. Nobody expected much. I do think that you might see a little bit more pressure to at least give some indication of what you think is going to happen to your company going forward from these CEOs. I don't think it'll be really hard questioning, but people are anxious for a little bit of guidance and at least what they can see and what they've seen over the last quarter to extrapolate out. So we will see if they get that or not.
All right, JJ, great to have you with me as always. Thanks so much for joining.
Thanks, Jill. Always a pleasure. Thanks for having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.